welcome Vinny and John. Uh,
Nice. Thank you. Thank you, Madhvi. It's such a pleasure. Yeah.
Absolutely. So I'm just going to start sharing my screen. Uh, I forgot to hit the record prior to the meeting, but now I have it recorded. So
Oh,
that's good.
okay. Sure, sure. All
Uh,
right. We are in the. Would you like me to share the screen now or
yeah,
later?
I'm just going to start
Oh, okay. There
just a
we are.
little bit,
Perfect.
just start sharing.
Sure,
Um,
sure.
yeah, so today we're going to talk about the sample deal review with Vinny, Monil Investment Group, senior assisted living as well as multifamily. Uh, I'm your host again, and a little bit disclaimer from our side. This is an educational event only. It's an educational purpose only. We are not your legal professional. We are not your CPAs or advisors per se. The information presented here is just an education and information purpose only, so please keep that in mind. We are not soliciting any for any investments, or we are not providing you any offer. The deals, there are deals in this video today, but these are just for sample only, just to preview the sample, not exactly the investment opportunities. And also please remember that we use a numbers here. There's, that could be numbers related to those, that particular deal, or it could be related to the past market. So don't hold on to those numbers. Every deal has a different number, so please keep that also in mind. Please consult with your own team, whether it's attorneys or CPAs or anybody else. Please just consult your team before you jump into any of the investments. Most of you on the call know me by now. I'm your host. I'm Madhvi Nadejan. I'm president and wealth strategist at Think Outside the Stocks. I help passive investors in a twofold approach. One is making your savings efficient with Infinity Banking System, and second is to make your investments grow much faster and tax efficient using syndicated investments. So I live in Austin with my husband and two kids, and in my past life, I actually worked for top five consulting for about 16, 17 years in IT field, mostly in project management. So I love that I can bring that experience into Think Outside the Stocks and help my passive investors. With education, and I have that kind of an analytical mind, so everything I do, I have that extended to my investors. I have rental portfolio of single family, Airbnb, multifamily, passive as well as active, and into asset management too. So that's who I am, and I'm truly, if you ask me what my passion is, my passion is really the education. And that goes really well with our guest today, because Vinny is super, super passionate about education as well. So the strategies that I found that I felt that I should have known earlier, now I take it to really my heart, and I want to start sharing with as many people as possible. Having said that, let's talk about our guest today. So Vinny has very, very interesting story. He started his journey in this country with $7 in his pocket, and now he has huge portfolio. He has about 440 million dollars units under his belt. That's incredible. I mean, Vinny, that's really inspiring. And he has those, out of those deals, he has like 15 of them, the syndicated deals done in last 3.5 years. So look at that pace. It's really fast paced growth. I'll let Vinny also talk about a little bit behind him, his theory, and what his background is. I always love to hear it from him. So with that, I'll jump into Shahid. Shahid is also an entrepreneur from Pakistan, and he is he been his partner into the senior assisted living. So he actually has this motto which I really love. I want to spoil the generation that spoiled us, and you will see why. I mean, there's in the sample deal review, we actually look at some pictures and videos, and you will see what exactly that vision put in picture together with Vinny and Shahid, what they have done. So having said that, a little bit about Think Outside the Stocks. My focus is provide that wealth maximization approach. You can grow your money, you can save and invest your money and grow your money, but we need to take a look at like a bird's eye perspective almost, to grow, preserve, protect, and pass our generational wealth. So that's essentially what, think outside the stocks approach is. Like I said, I work with using the Infinity banking system to grow your savings, as well as the risk managed syndicated real estate investments, and of course the education, kind of the bottom line of everything. So in upcoming webinars, actually we have some upcoming webinars which we will talk about using 1031 exchange or opportunity zones, and as well as the DST. That's going to be a three-part series coming after this particular webinar. So please be with us, every 2 weeks, and we have more interesting people coming over. So today, now back to you, Vinny. If you can share your screen, and please talk a little bit about more about yourself, because I always love to hear from you.
Thank you. Thank you so much, Maud. We really appreciate that. Thank you, John, for joining. John is my vice president and partner in the business also. And yeah, see if I could share the screen. It says host. Yeah, would you make me the co-host? Then I'll go ahead and share the screen.
Yeah,
Welcome, everybody, for joining tonight. It's going to be
you
a lot
should
of
be able.
fun. Thank
You
you for
should be able
taking
to
the
share.
time to be. Okay, great. There we are. And we'll just go here. Oh yeah, I had done just that movie there. There we go. Okay, we'll just go back here. Uh, I remember. Okay, there we go. From the start. Alrighty, there we are. I hope everybody can see me on the side and also this, the whole frame we have put together, cool PowerPoint presentation. The company's name, Monil Senior Living and Monil Investment Group, actually, Monica and Neil are our two children. They've grown up now. That's how our brand is called Monil. That's Monica and Neil kind of put together. Again, Madhvi went over, it's a confidential, information provided to a prospective investor. We are not, this would be a disclaimer anyway, but that's okay. She went over that, before. Who is Vinny Chopra? She already went over that. Again, I came here with a dream and $7, and it's been a wonderful journey all through these years. And I converted into a salesperson, actually, an engineer turned into a sales consultant. And when I sold Bible books and encyclopedias door to door in my cutoffs, shorts, and a husband for 41 years, 41 years now, we live in the Bay Area near San Francisco in Danville, Black Hawk. And our children went to right there. They are our real strength and wealth right there. And I'm a broker also in California, but never sold or bought. I just have been able to communicate with a lot of commercial brokers all through USA to start doing the syndications. That's pretty much. Let's go to the next one. With our both portfolio, why should you be listening to me or to my partner Shahid Imran, who couldn't be here today? But we have a total of almost $1 billion now in the portfolio with ours and his put together. So we have a little bit credibility that we could do it together, what we are sharing with you. The exciting part is I would like to kind of, some of you might have seen my presentation before, but it's a good refresher. See, the thing is, there is a choice driven on the left side, and then there is a need driven on the right side. And I would love to ask John, I know you do a great job, buddy. Could you kind of take us through? Yeah.
Of course, absolutely. So when you guys think of senior housing, typically people think of it grouped as one, but there's actually five main types. So if you start from the left, age restricted, and that's where of a choice. So people are choosing to move in there. And as you move from left to right, it goes to independent, assisted, memory care, and skilled nursing. And so as you get all the way to skilled nursing, it's a need. So no, people are no longer choosing, they're being put there, and it's need driven. So where we're at is right in the center, assisted living and memory care. We like it because it's no longer a choice, it's need driven. So it's going to be around. And as you'll see in the next slides, the demographics are exploding, but other reasons we like it: state license, not federally. The average stay is much longer than the typical average apartment stay. And well, there's many slides we can get into, but we love it because, those reasons that it's choice driven and it stays long.
Totally. Thank you, John. Thank you. Again, as you know, the senior housing, we're going to show you some of the other ones. This could be right now, or I can come back to it. But I would love to take you all to this one. In this slide, as you can see, where we are, the silver tsunami is flowing through USA. Right now, 10,000 baby boomers are turning 65 every day, every single day. 10,000 of this baby boomers are going. And then, of course, millennials are there, which is also 75 million. Millennials population is growing. They are there in number wise. And also we find from 56.4 million approximately right here in 2020, 65 plus is going to increase to almost 100 million. That's like doubling, almost doubling. So in the history of USA, we're going to have one third population very old, very old, and trillions of dollars will be spent in the housing, in the medicines, in the care, in caregiving and doctors, everything, in the next 30, 40 years. So this little green one right here, 6.7 million, is actually 85 populations. So there is the dark green, which is 65 years and above. And then this one, of course, 65 plus includes 85 also, but a larger segment of this whole thing is 6.7 million, 85 plus, which is going to be tripled, almost triple, 300%, times. Look at that. So that's what we are finding. And you will see on the left side also very much, this is 2020, but look at the spectacular growth, So demographical shift is happening. And that brings out to the shortage of the product, which we have another right there. Okay. We took that out, but that's okay. But one thing we wanted to share was that the senior housing didn't take a big dip at all in the crash of 2008 and 9. As you can see, the apartments also went down. Of course, hospitality went way, way down. The offices and shopping centers in the big crash, but look at the senior housing, didn't take a dip at all. It's right about stationary, just about leveled off, but then it went up and so on. So let's just see the next one. Again, we would love to share with you, what do we do when we decide on putting the senior housing or assisted senior living? It's a big drawn up process. We have to look at the demographical characteristics. We have to also look at the affordability of the 70, 75, 80 years of age of the, our residents. We call them residents. They're not tenants in our other communities also. And supply and demand is huge. We have to see how many of these units are out there and how many we are able to, bring up, as it takes us about 2 hours, 2 years to build one from the starting stage up to the final stage. Competitive, and future plan communities and third party independent feasibility studies. We, don't just rely on our numbers. We get outside company consultants to do very thorough feasibility studies and, finding out, because we are spending millions of dollars of our money in buying the land and going through architectural and ordinance changes and many, many, many trips in all these different meetings and so on like that. So again, senior living investing can bring great tax benefits also with the 1031 exchange, because we are able to take from dollars of our money. Oh, okay. So cost segregation, many of you might already know, cost segregation is a great way to really be able to do lots and lots of tax breaks that we are able to do with the taxation. By taking cost segregation, we are able to show the paper loss. The property might be going profit, 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 but when the taxations are done, then we are able to, have the cost segregation, put that minus there, and that makes it going negative. Many of, not as an example, like 100,000 investors many times are able to get in our company. Again, this is not in the future, it could happen, minus $61,000, minus 61. So those kind of things. But I know that I saw one slide here I would love to talk to you about, and that is why we are very excited about multifamily, definitely, and we are going to continue in the B class because we can raise lots and lots of money right now. And I know otherwise we have over 400 investors of our own company. I know Madhvi has quite a few investors who invest with her. So, these properties, conventional workplace, we call it working class, are strong, definitely, but we are building brand new assisted living. So it's like A plus class. Income potential is higher because in the regular multifamily, we might just charge for two-bedroom apartment or one-bedroom apartment $950 or 1400, 13, 14, like in the one we just bought in Austin, Texas. We are, oh, right there in Austin, but in this one, we are collecting three times the rent, three times, because we are providing them the meals, we are providing caregiving, we are providing the linen and the laundry and everything like that, and snacks and transportation. So, a lot more expenses are there, but the revenues is higher too. But concessions are zero, delinquency is zero as compared to this one, non-working class resident. So that's a huge part also. I would like everybody to kind of see why it's such a safe investment on this side, is because we don't have to chase jobs and jobs and jobs, which I've done it, 30, 29 times. We have bought 29 different communities, in the last 14 years. And now we are buying those plus also building these, and the longer stay, that's the other thing. In the newly assisted livings, we have 24 to 30 months, stay, as compared to 6 to 13 months. Of course, renewals happen, and then maintenance is zero zero because it's brand new, and so on, like that. So let's just go here. Love to answer any questions, Madhvi, if somebody's
Actually, we
asking
actually
us.
have a question regarding
Please.
senior assisted living. What is the
Oh,
global
please.
impact to these facilities? I mean, I know across the nation there was severe impact to particular this age group. So, would you like to discuss some of that?
Oh, surely, surely. The COVID did not hurt us at all, by the way. Just to mention that, the reason is most of the deaths that came in the epidemic came through the nursing homes. If you look at lots and lots of, different, news pieces and media, all the news like that, we did not have a single death or positive. Well, we did have, I think, one or two cases of positive coronavirus, but we were able to, keep them secluded. And, we always follow the CDC guidelines. So I don't know if I didn't hear the first part of it, but we have had tremendous demand, because this is a need driven market. It's not a choice driven. When somebody slips and falls and they cannot really stay independently, if they can afford to have caregiver come, and the nurse can come to their home and they can pay extra money, monthly and so forth, and if a cook can come to cook, and to things like that, that's the right way to live. But if they need assistance in bathing, or dressing, or they cannot cook, and then also if one of the spouses passes away, we find that's when the life starts to kind of go down. And then you need somebody, to build, in that, build the void, and that's when the children, they say, mom or dad, please go ahead, and they start looking at different facilities nearby to get their parents in there. So what we find is the need is there. And you're right, with the scarcity of, I mean, with the scare of the COVID, it did hurt a little bit last year, but now with vaccine coming out and things like that, we don't see much, huh? I hope that answers, huh?
Yes, definitely. We have another question. What is the average rent from city to city approximately? And I believe this is for the senior assisted living.
Oh, okay. The cost or what? What is
The average rent. So
Oh,
this is
rent. I'm
monthly
so
rent,
glad
right?
you said that. Actually, there is one place in this presentation. These are the ones we have built, by the way. Please Google us, Hampton Manor of the towns. By our partner lives in Michigan, so he's built a lot of these in the last 8 9 years in Michigan. All these are in Michigan, by the way. Now we are coming out of the Michigan area and going to Florida, to Virginia. So our goal is $2 billion this decade to flow from the East Coast to the West Coast. So we are traveling fast. And maybe I might just mention a little bit about my expertise comes from the conventional multifamily. I'm a syndicator. I raised about 143 million, something like that, and then bought lots and lots of great apartment complexes. This is just the last one, Austin, where Madhuri is right there.
Yeah.
That's the one near to the domain. And I was just sharing today, we increased rents by $400. We just bought it in September, by the way. So it's already increased in value so much because we paid only 112,500 per door. And I think the brokers are telling us it's worth 132,000 right now. That's a lot. That's a whole bunch of money that our equity has gained. Then we bought it in Florida, and then Florida, two properties, 52 million and 35 million, and then lots of other portfolios. Like I said, I purchased 29 of these in the last, and sold quite a few of them, and so on. And it will be worth it if I may just show the video to show. Oh wow, okay, maybe it's going to come here, John, right? Love to show you all like what we are building. Since you are joining this seminar, so this might be worth to look at it. So let's see here if we get, yeah, just
And
to
we
get
can
an.
also share that link in the
Welcome to Hampton
Totally.
Manor of
It's
Cape
on
Coral,
YouTube. We
the
would love
Cape's
to share
newest
the link.
premier
Yeah.
independent assisted living and memory care facility. I'm Amy Hannah Eckenrode, Community Development Manager, and I would like to invite you to join me on a tour of our beautiful community. Hampton Manor of Cape Coral features the only 77,000 square foot, one-story facility in the area. As you enter the facility, you are greeted by two comfortable sitting areas, and behind our grand waterfall is the formal dining area for independent and assisted living residents. All award-winning meals are created just for you by Chef Larry DeLuzio and are served restaurant style. With three gorgeous garden courtyards, residents can enjoy our in-ground swimming pool, putt-putt golf, or the beautiful rock formation waterfall. Our stylish beauty salon will have you looking glamorous in no time. Our activities calendar keeps you on schedule and in the know. Our luxurious spa allows you a tranquil place to unwind and de-stress. The club room is designed for some hearty pool or card games. And right around the corner is our private library. Enjoy afternoon snacks and entertainment in our poolside bistro. Or a relaxing conversation in our sitting room overlooking the waterfall courtyard. The modern theater invites you to indulge your senses in a delicious bag of popcorn and your favorite movie. The spacious sunroom invites you and your guest to take in an afternoon of conversation or perhaps a puzzle or card game.
So I think, we'll put the link also underneath there. I mean, so that all our, viewers can watch it. We just want to share this is actually the facility.
This is incredible, Vinny. I mean, this is, really that's spoiling the generation that spoiled us. I mean, look at that when we think about, sending parents to these places, right? So people think about, okay, this is going to be our last place. This is, we are going to die there, end up dying there. But looks like this is a place that they can actually live, right? It almost feels like a resort, with spas and, movie theaters and all these amenities that's been provided there. It's really a luxurious resort kind of feel to it, and love that openness of it. It's not like small rooms or small stuff, right? So love that, Vinny, what you're doing. So
Uh,
please copy that link in the chat and
we will
continue, finish watching that video.
totally,
If you
totally,
guys want to, please go ahead, Vinny. And we have a
totally.
couple of questions. Do you want me to take them now?
Sure, I would love to, love to.
Sure,
This is
sure.
the
So
website.
Rekha
Yes.
asks, are the assisted living and memory care in the same campus? Is it more like a continuous care facility?
Oh, very good point. Thank you, Rekha. Actually, we do like 92 units that we build. We usually build 88, 92, even in Michigan. We built like only 32 or 64, but we are multi-family. We want to be able to provide the movie theater and all, spa and all, because we have larger number of residents, right? So we have about 80% is independent and assisted living. Then one section of our building, always to the right, about 18 to 20, is the memory care. So it's all in one, all in one. But we do not have rehab centers or nursing home facilities at all. It's only like one nurse according to what we need, and then lots of caregivers who are certified by our own, training, 6 weeks training, and we pay them little extra money so that they stay with us, longer than shifting around and so on. So, just to answer the question, you're right. It's in one complex, 5 to 7 acres of land we take, and we never build it two-story. We really like to build it one story without elevators and lots of space and courtyards. So this is like, I just wanted to show this one, but we'll go back to our PowerPoint presentation and you'll see that's our business plan. And, like we could talk about it. We locate and analyze first, then we do the feasibility study, takes us about 6 to 9 months to 12 months. Then we raise funds. We never use money from the investors to do these at all. We do it on our own, dime or millions. And then we raise money right over here. We develop it right away. In 12 months, we build it up, and then we lease and stabilize. That whole thing takes us, like about year and a half, let's say. And then third year, we sell it. We sell the asset also. And now actually we have a REIT or a fund which will be buying whatever we are building. We are putting so much sweat and blood into these facilities. So we were selling them to REITs, by the way. But then we found out REITs sell it to some other people, make big profits. So now we are going to be internally doing it. But let's just go ahead and look at it.
So
Uh,
before we go ahead, there's a follow-up question actually from
please.
Mark on the
Uh-huh.
same note that Rekha asked. And Anand, I will get to your question in a minute. I just wanted to club this question with the previous one.
Sure.
There is no skilled nursing skilled care nursing care, only independent living and assisted living, as well as memory care. In the memory care unit, is it a lockdown
It
facility?
is. It totally is. We adhere to all the laws of the state because it's state, governed field, and it's total lockdown. 1,000% correct. And also, there are no doors of any of our residents to go from their unit in the memory care. Only the windows are there, but we have caregivers who are fully, and we have different dining halls for them, the meeting rooms, and even different entrance. We have two entrances, one major, middle one, and one small one for the memory care. So it's total lockdown. Yes.
That's great. And Vinny, I loved from the business plan and especially development projects, right? There's like a two phases of a development project, right? The first phase is a little bit risky because
Yes.
that's when you're going for the permits and the city, there could be delays in the general timeline. So
Yes.
looks like you're picking up that risk upfront. So you are putting your money
Yes.
front. Once it's all cleared up and you're ready to build, that's when you have the phase two where the investors are coming in. So
Yes.
this is, even though it's a development project, it's not
Yes.
your typical development project.
It's not. You're so right. Because unless we get all the permits and the full, our loan is approved, construction loan and everything, that's when we raise the money. Usually we can raise $4 to $6 million in 1 week. It doesn't even take us a week, actually. 3 to 4 days it takes us, because so many investors are just standing by. When is the new deal coming?
Right.
But then we
And
do
and this
the
is exactly the point of providing that review for you guys, because
yes.
if it goes so fast and you want to invest in this properties, these investments, the
Mhm.
time is just quickly gone, and for you
Yeah,
to just come back and act on it quickly. So
good.
please feel free to ask as many questions. Vinny is a truly educator at heart. So
Yeah,
feel free to ask for questions, and even after this today's webinar, if you have questions, please do reach out to us.
surely. No, thank you, Madhvi. I wanted to kind of share here what our communities include. Like for $4,400 to about $5,500, by the way, we provide everything. Amenities and services included in the monthly rents, all utilities except the telephone, 3 meals and snacks, coffee, tea. We cook to order for each resident. Our chefs are trained, and then when the breakfast time, they ask them, what would you like to eat in the lunch? And at lunchtime, just like in a cruise ship or a resort, all expense paid kind of thing. And then they ask what's the dinner, and if they even provide their own recipes, our cooks cook those recipes also. It's
And
amazing.
that's all included in that
All
monthly
included,
rent that you
no
said,
extra
right? So
cost.
it's what, 4,500 to what's
45
the range?
to 5,500, depending on the one unit studio or two bedrooms. Yes,
Absolutely. So
yes.
Anand, that answers your question about
Mhm.
that rent. And Anand also has a question that increase in Austin rent by 400 from what? I think that's more going back to the multifamily. If you want to take that question now
Oh, I
or
would love
later,
to. Love to. See,
sure.
like what happens is when we are, we increase the rent at that property, lakes at Renaissance, by the way, we like to find the right properties where mission driven units are there, right? So, mission driven units means Fannie and Freddie were fighting to give me the loan, and they gave me 2.68%. What? 2.68% on the Austin deal that we just bought, 3.308 units. And they said 94% of the units were mission driven. It means the seller did not increase the rent. They could have increased the rent, but they didn't do it. And we, as the new buyers, were able to come in now, and we are increasing the rents by 100 to 150 to 175 units. Some units we upgraded, that we got $400 bump of the rent.
Thank you
you
for
know
sharing.
that's what I was mentioning. But in this case, when I shared with you all that chart, that meant that in the conventional, if you're charging $1,000 or $1,200, let's say, for the one unit, in the senior assisted living, we can charge three times that much, 4,400. So it does include a lot of these expenses do come, which are not in the workforce housing, remember? Because we are just giving them the unit, empty unit. In our case, we are giving them, great unit. I don't know if, yeah, they bring their own sofas and, their own furniture and all that. But we take care of all the rest of the things, the housekeeping, the laundry, the linen, basic ADLs, the activities, daily living, social, educational, cultural programming, scheduled transportation, everything is included in that price. And the units will include universal design features, emergency call pull plugs, high ceilings, kitchenettes with cabinetry, all provided, for the refrigerator, amply sized closet, storage in the bathrooms, private bathrooms in every unit, no communal bathrooms. Lots of these old, assisted livings we visit in the communities, they have communal bathrooms, but they're stinking and they're very old and, like that. But we build it from scratch. And community will also include the lounges, the movie theater, library, club rooms, salon, spa, nurse's office, gazebos, outside sitting, conference rooms, public and private dining rooms. Everything is included. We don't charge anything, even for the spa. If the seniors are there, they have been getting hair color, ladies like that with their own, some spa lady, right? So they can come into our facility and we don't charge no money at all. And they can give them, the haircut to the guys and, change the color or cuts like that, right? All those things are all included in the thing. So we're very, very excited to put together these very exciting communities together. And again, it's a five-star dining, interior quality, the grand pianos and the entertainments and dining and, I mean, dancing. And so it's a nice lifestyle that, the seniors are making friends. In the workforce housing, you don't, well, you make friends, barbecue once a month or so community. But in this case, it's all like a resort, and everybody knows other people and they meet and they make build relationships and have a wonderful golden years, we call them, right? Because after our facility they might get really sick, then they go to the acute care hospital and then over there, or they go to hospice, or they go to memory care. So majority of our residents, and we've been doing it for 9 years now, they love to stay and the quality we provide. So, I think I would love to answer more questions. I do want to kind of, oh, this is also the courtyards with the gardens and everything. We love that. When the seniors are planting flowers or vegetables, because it's their community. That's the key thing. And the putting greens and gazebos and waterfalls, we do all those things. And very spacious, high ceiling, their units are studios, one bedroom, two bedroom, very spacious bathrooms. Sometimes wheelchairs have to turn. So every small, meticulously designed detail is taken care of. And then we are looking in all different places in Florida, in Virginia, we're coming to Texas, we are coming to Austin, by the way,
Right.
Houston, Fort Worth, all over the place, all over the place.
So we
So,
have a question here.
please.
Management for the memory care must be
Mhm.
different. Oh, sorry, something on in my throat.
Sure.
Must be different guidelines with caregiver requirement to intake of the residents. Is it managed by the same management as assisted independent living?
Very good point. We manage our whole team of staff, from the executive directors to managers to chefs to caregivers, nurses. Everybody is on our payroll. We are vertically integrated. So we have full experience for the last 9 years how to train them, how to take care of all the different things. So we manage ourselves. Yes, yes. Mhm. with
Great
our own
questions,
company.
guys. So far, I mean, it helps to understand to you also and to as well as the entire group. So keep the questions coming in, and now we are kind of going into that actual sample deal. I think this
Mhm.
is the past deal that Vinny and his team had.
Yeah.
So yeah, please go ahead.
No, thank you. Thank you so much. Everybody watching also. I didn't know we have this for slide. Love to share. I wrote a book actually, which has been a well acclaimed book. If you'd like to find out more about, syndication or commercial, investments and things like that, you might like to. And then positive. I'm a kind of quite a positive person. That was my second book. And we are writing on senior living. The third book is going to come out pretty soon. And then I also do the webinars, and my podcast is getting 100,000 downloads now and getting it to the 150,000. So that's that apartment syndication. And then Winnie and Bo show tomorrow at 9:30 live. Then my motivation talk show. I mean, all these things. But let's go to Shahid also. He's a great, great guy, partner who has real passion. He used to sell medical supplies, by the way, to senior livings and nursing homes and all, and he would cry when he came home because the condition was so pathetic in Michigan, and the food they were feeding the seniors, he would just not. So he sold his business for multi millionaire, and then he said, I'm going to design from scratch the best of the best luxury at affordable price. So that's what the same mission. Now we are on that for $2 billion. We would like to do
We
it. And
can
John,
see
huh?
we can see the passion. I mean, even Rekha mentions that amazing facilities, love the amenities, and how the seniors are pampered.
Sure,
So really
sure.
wonderful properties. So let's talk about John.
Thank you. That's John right there, buddy. He's the CEO of Rusin Capital and vice president of my academy, and also partner in the senior assisted living. Just a wonderful, wonderful person. And, we're just kind of working all together to accomplish some big, big goals. Now, I would love to take you back to Austin right here. So, this is a sample deal. Love to share with you all. We bought it last year with myself and my partners. So we own, I think, 53% of the deal. They own 47% of the deal. And we raised, 16, yeah, 15, $16 million, something like that. But we did a 65 LTV because of the COVID happening and everything. We just wanted to be not doing high leverage deal. You know, we are very conservative people. That's the good. My wife and myself and any partner. I've never partnered at all. We just started to partner a couple of times last year and year before. But again, we like to look at the market overview, huge, huge. Location overview, huge. Property overview, huge. All these three things really tell us whether we should buy or not buy. So, for example, right now, we are looking at deals in Fort Worth, Texas, as we speak. We are looking in Knoxville, Tennessee, right there in John Rusin's backyard. We are looking in deals in Florida. So we always are looking for the emerging markets where jobs are coming, because empty apartments are not going to do the job, right? So that's what we do. Lots and lots of research goes into our whole team, underwriting team, our different demographical shifts happening, what jobs are coming. We do lots and lots of extensive, what's the word, research, because it's a big thing to get on a loan of $22 million loan. And, which is again, we always have done the deals where the letter of intent, we only do the letter of intent on a deal when we have a blessing from the for the loan, by the way. So that's why I've closed all 34 deals from letter of intent to the final closing last 14 years, 100% record. So I've never had any deal fall through, through the crack. Anyway, so business plan, interior renovations, like we will be renovating these in this deal, and a bump of 150. We just saw, I just got the news today from the asset management. And they said we bumped it by $400, and still we were able to rent it. People are loving that product there. Lakeside Renaissance, some of you might like to look at it. We have done in 6 months what we have done there. It's amazing. I mean, we have just taken fencing around the pool, the main leasing office, the signage, the beautification. All those projects are going on. So we are doing all those things there. Additional value adds, and this is the cap rate we bought it at right there. T3 4.2, and DSCR 2.43. Usually we look for DSCR of 1.65 actually now after COVID. The Freddie and Fannie has increased those levels. It used to be 1.25, but this is at 2.43, which is exciting, very exciting. 5-year hold. Usually we go for 5 or 6 year hold. Money we raised about 16 million, like you said, and our investors. This is past deal, by the way. So I'm not selling you anything at all. This is just an example of what we did, and so forth. So this is average investor COC, cash on cash of 8%. Most of our deals are like that. Investor equity multiple of 1.8, 1.9, or double money, and then average annual return, of 18, 19%. You could kind of look at that internal rate of return of 16.8. I'm just saying these are examples. That's all we provided, our investors, and we did better, which I love it. We were saying 2.83%, but we got 2.68%, which is very, very nice. Again, we do look for lots and lots of factors before we purchase anything, because we got to be conservative in our underwriting, in our assumptions, and also very nicely driven by the jobs, because we don't want a neighborhood that's going down. Then it's going to be not be neighborhoods either go down or stay flat, or they go up. So we are always looking for this side. Just to give you an idea, again, this is not selling anything. We just sold Atlanta deal. I bought it in 2017 for 12 million 200. Let's say I sold it just a month back, right? About a month back for 18 million 850. 850. 6 million increase, and I did not put but 200,000 into it in the last 3 years, literally. So I think that's where it's all about. Whenever you want to work with or invest your money, please look at the operators, look at who is at the top, how many people are there, who's on the loan, who are the principals, what's their track record. All those things are very, very important. What's their communication? you know live website communication like this one, which I've been doing it for last 14 years, with my investors coming into and asking me live questions and things like that. So that's pretty good. And then we go
So
lakes and
Mark has, sorry to interrupt, Vinny. Mark
please,
has raised
please,
his hand. And Mark, I have allowed you to talk. So if you want to
please,
unmute yourself and ask that question, please go ahead and do that.
surely. Hi, Mark.
Okay, we'll get back to him. Please
Sure.
continue. I think,
No worries at all. Sure, Mark, love to answer a question, and this is the one right there in Austin. Of course, we bought Princeton Park, 2003 built over there in the Melbourne area and free in the Florida on the Kennedy Space Center nearby, and we had 98% of the rent collections during COVID. 98%. So it's very exciting that, I really believe that, where the jobs are, we should be buying. Of course, that's why we are liking Carolinas, we are liking Tennessee. We are looking at, like I said, Fort Worth, Texas, and around Dallas and Austin and so forth like that. So we'll be possibly buying something right there in your backyard, Madhvi. Tell us some
absolutely.
good deal. Yeah. So this is the property right there. Very nice. And we are very, very fortunate that we got it at the right time, because now the per unit price has gone way up. We just underwrote another property, and not even half a mile away from this property, and the minimum they want is 146,000 a door.
Wow. And
146.
and I'm very, very familiar with this area, the
You
area
are?
around the domain, which is, the primary location, one of the primary locations in
Yeah.
Austin. This is such a hot property, and this is very, very close to that Apple campus that's coming
Oh,
in.
yeah, that's right. Yep.
Thousands of jobs in that area. So that's an incredible location, by the way.
Oh, thank you. Thank you, Madhvi. Yeah, I've been to Austin. I'll be coming there, but it was to attend a wedding many years back. But again, we have a good, solid business plan, interior renovations, exterior, additional value. We are always looking at what the rent comparisons are. We do a lot of thorough studies before we design our model and how can we increase the numbers. This is a really good one. This just tells us rent comparables, one bedroom sub market. There was like this particular asset is charging 1053, and we were charging only 850 when we took over. And then over here Parks is right a little bit lower than us even, and then this one, and right over here, and then this is our Lakes at Renaissance at about 1044, and then Arbor is at 1222 right there. So it's good to kind of make sure that your assumptions are really clear and what you can accomplish once we pick up. So interior renovations, all those things there, Renaissance and all that MSA. Love to answer more questions. Yeah.
Yeah, absolutely. I mean, guys, please ask questions. And this is exactly what Vinny is sharing today. That's exactly how the webinar would look like. It will talk about the property, the location, the market around it. It will talk about those rent comparison. It will talk about the business plan. It will also talk about, why are we how are we planning to bump the rates,
Yeah.
the rents throughout the property. It will talk about the investor returns. So this is exactly how the deck is going to look like.
Yeah.
Sridhar asks, can we get a copy of this presentation
Oh, sure,
tomorrow?
sure. Why not? Definitely. We could provide like a PDF copy,
Yeah,
which
I'll
it's
share.
very big because of pictures, but we have a knack to reduce it down, the size, and we could provide that. Sure.
Okay, and I'll
No,
make sure I'll pass that on with the recording.
yeah.
So yeah, back to the Austin, market that this deal
It's a
talks
hot
about.
market, very hot. I think in the whole USA, you are in the prime
Yes,
location.
absolutely.
Right there, definitely, definitely. And again, we look for diverse economy. At least three employers is what my criteria has been in the last many deals that I've bought and so forth. So that way, oh, I'll just do this. So it's good to have diverse economy, then growing everywhere. Look at this here. I mean, we just designed all these beautiful graphs and things so that our investors sitting in California all the way to Florida can invest with us. That's why we can raise money so fast. I mean, we raised $16 million. Literally it took us 2 weeks, just 2 weeks. Yeah, that's all it took
So
us.
I have launched a poll I mean, this is not an offering or
No,
investment
it's not,
advisement,
not
but
at all.
as Vin is talking about, there is a pipeline that's coming in. So if you guys are interested in investing with Vinny's deal, please answer that poll. We take both me and Vinny take SEC regulations very, very seriously. So if you are interested, reach out to us and we will make sure that you are on those communication when the new deal comes in, and you can share
Yeah,
it with me.
actually, we are coming with some deals. I do wonder if you will allow me. We are having a 506C deal coming up and also 506B. What's the difference in the two is that 506C, we could talk numbers and advertise, and we'll be doing ads, everything like that for those deals. But then Mark wanted to come in, right? Is he able to ask the question? Mark was there. Hello,
Yeah,
Mark.
Mark, if you want to unmute yourself, you have a raised hand. If you do want to ask a question, please go ahead and do that.
Love to. Huh?
Yeah, I think he took it out, looks
Oh,
like.
okay.
Maybe his
Okay.
question got answered. So yeah, please, provide that answer to the poll. And Vinny, I will let you continue about just could you give us some highlight about what's upcoming, what's going on with Monil Investments, and what can we
you know,
expect as investors?
Oh, thank you. Thank you. Madhvi, what I found is my investors, about 400 of them now, who have been playing ball with me, majority of them for 14 years. They started with me 14 years back with 50,000 or 100,000. Our number one investor right now has 3.8 million, just one investor into our many, 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 many deals. So we have sold and, given money back and then equity gains and everything, but now we are doing like a fund structure. And the good thing about the fund is that the investor's money is not tied to one property, because see, that property can do good or bad, right? So when that happens, oh, thank you so much. Yeah, right there, see this one over here in the fund now, we are able to do B class multifamily purchases. In the same fund, we will be able to give the equity for ground up senior assisted living right in the fund. So some of the monies will go there, some will go there, and then will be also, actually, I'm going to say maybe brand hotels on the right side, number four, but we are buying stabilized assisted living is our third thing we are doing, as a matter of fact. So I will even change it, no worries. But so this is something coming up right now in the next project where we built the Cape Coral, which we just shared. We are not selling any securities, but in the future, we are planning to buy that asset. And because we built it and we want to cash out the investors, and now our fund is going to own the the Cape Coral facility. Yeah, yeah.
So it's a stabilized facility. It can provide
Yes,
that
exactly.
cash
Getting to
flow.
stabilization. Yeah, getting to stabilization, because it's like leasing, up leasing like that. But because it's fully not stabilized, we'll take a bridge loan, but we are getting a price cut. It's worth 20 million when it's fully stabilized, right? But
Mhm.
we are planning to buy it at 17 million, 3 million off, which is a wonderful, wonderful thing. And we already have so many residents in there. We are advertising more, so that it's going to take us 60 days to close anyway, you know. So
Right.
it'll be about like 50% occupied, something like that, 50.
Sure, sure. So if you guys are interested, please, go to thinkoutsidethestox.com/invest, or
Mhm.
just, scan that QR code to join
Yeah.
the investment club. It's free to join. You will just get notified for upcoming investments with Winnie and anybody else with Think Outside the Stocks. But definitely we have that, in the pipeline. So keep that in mind. Please ask any more questions, unless Winnie, do you have any more slides to share or any other
I
information
think
to share?
that's pretty much. I would say, yeah, there is another slide where it's the academy. If any of our viewers who want to learn more how to underwrite, the deals, or how to talk to brokers, and that's where I have the academy, multifamilyacademy.com, where I coach actually every Wednesday. I love to spend an hour and a half to 2 hours with lots of investors all across USA. They join the academy. We provide blueprints for success, and also give them every tool that we have designed, and I've been practicing and using them. We provide them to them, and so on. So
Yeah,
that's
and then you guys, if you are interested in getting on the active side of it, I would highly, highly recommend. As I say, that Vinny is a true educator at heart. So
yeah.
he is, he's such a giving kind of a person in
Thank
terms of the education too. So please feel free to join that.
you.
I think that will incredibly add a lot of value to your education journey. So yeah, I think if you have any more questions, we will be still here for a couple of more minutes.
Yes, yes.
Please go ahead and answer the put those questions in Q&A box. And I really want to immensely thank you, Vinny and John, for being here.
Thank you.
And it was kind of a cramped up, two-in-one sample deal review in terms of both senior assisted living and multifamily. I was
Yes.
thinking about either we do senior assisted living or multifamily, but I thought that we just couldn't do justice to
Yeah.
your portfolio. So let's just combine it together.
Sure.
And that kind of provides us that look into the little bit peep into the future for our investors, that what's upcoming with you and how that diversification is important. And, instead of just being an investor on one single portfolio, if they can be invested, sorry, one single project, they could be invested in portfolio of deals of a different asset classes. So that's kind of a diversification. First of all, it's a diversification outside of the stock market. Then
Yeah.
within the real estate, also different asset classes, you can see that there is a multifamily which is again with a deal like in Austin has provided such a high rent bumps, but there is the three times almost rent in the senior assisted living. So why not be part of, in that one particular shot, be part of multiple deals altogether, right? So yeah, that's upcoming. So I really want to
I
thank
would love to
everyone. Thank
say
you.
one more thing. Those of us who are watching later, even like the hotel we bought Hilton Garden Inn in Texas, by the way, and we were fortunate. We bought it actually end of 2019. Then COVID hit, but luckily the medical staff of that town chose Hilton Garden Inn to stay
Really.
in. So we've been making money actually during COVID because of 67 to 87% occupancy. And our hotel, I couldn't believe it, is we bought it for 6 million, in a receivership, and it's worth 11 million in 1 year. In 1 year. So I have partners who are very savvy in the hotel industry, and that's what I'm really relying on their intake. We know the people at Hilton and Coach and Marriott in the top. So we are looking for those foreclosure properties which will not be given to just outside, but they'll be able to give to the people who already have the inroad. So it's going to be very exciting in the next 9 months or 12 months. We'll be buying some mid tier. We always go for mid tier, like Marriott Courtyards or Comfort Inns and Hampton Inns or Hilton Garden Inns, and Embassy Suites is another one we are looking at. So that will be something. So it will be very diversified, like you said,
Yeah,
Mark.
looking forward to that, Vinny. And then to that, we have a question. What is the timeline for this fund investment, and what is the exit strategy?
Very good point. The fund actually, we are raising 50 million, 50 million, and first batch is only 6 million we need. So we are going to be only raising six, but the paperwork is the same. It's going to keep on going for 3 years, 3 years, and then we'll be able to, after 3 years, depending on the condition of the cash flow, our investors can take out or try to stay for 5 years, just like in any multifamily investment, commercial. As you know, most of the operators say 5 to 7 years, right? So we are saying, 3 to 5 years, I would say, but mostly five. We don't want everybody to exit, and we can, and it says in the legal paperwork. But if some conditions do happen, then we are able to cash you out, after 3 years, but nothing before 3 years.
Yeah, and a lot of times my investors also ask if it is a cash flowing deal and it's providing that consistent cash flow.
It
Can you
is.
stay in more than
Mhm.
that 5 years? So if it is a fund model, will that allow them to stay longer than the 5 years, or do they have to exit
Totally.
after 5 years?
Totally. Actually, we are even asking some of our investors saying, Vinny, okay, if I get this one, is 7 year going to be the end of it? No, actually, it's going to go to 10 years if you want to, right? But we will close it at 50 million. This fund, then we'll do another fund because we want to keep it manageable. So within $50 million, we could do about five, six deals, looks like, So it will be small, of all mixture of things. Yeah, yeah.
Thank you so much for that, Vinny. Again, if you have any questions, please type it in. This is your last chance. I mean, we will have Vinny back when we have actually the investments coming up. So we will have that webinar soon. In fact, we do have that date, right, John? We have the date for the investment webinar that's coming up?
I don't think so. We have designed it yet. I know we are putting together,
Okay.
And yeah, so maybe what we'll be doing is we're going to be recording it as Monil and Senior Living, and then we'll be providing that recorded webinar. And maybe you would be able to, along with other partners. Madhvi, it was not
You
being
should
able
be
to
able to
possible
share.
to do it for everybody. We
Absolutely.
can share that. Yeah, yeah.
Yeah, so look out for that invitation to that webinar where we
Sure.
can share that with you. So with that, again, thank you so much, Vinny and John, for being here. Vinny, you have such a
Uh,
positive personality. It's always such a pleasure to talk to you and see that energy. And thanks everyone else also for being here this weekday. Hope you have a great weekend and talk to you soon.
Thank you. No, thank you so much. Thank you, everybody, joining tonight. And please reach out to Madhvi or me, and we would love to take care. Huh? Thanks so much.
Everybody's saying thank you, Vinny, to you. So
Oh,
thank you
thank you.
again.
Thank you so much. Thank you.
Absolutely. Thank you so
God
much again.
bless you. God
Bye.
bless
Have a
you.
great
Bye
weekend.
bye.
Bye.
Bye.